Good
Okay.
afternoon, ladies and gentlemen. A very warm welcome to another virtual Budget Highlights 2023 seminar organized by the Seminars and Conference Committee and Taxation Committee of the Institute of Certified Management Accountants of Sri Lanka, the National Professional Management Accounting Body in Sri Lanka, incorporated by an Act of Parliament. CMA has always played a lead role in this digital environment to update the knowledge of its members by organizing continuing professional development CPD programs for its members and students. The presentation on the budget highlights 2023 will be conducted by a panel of experts in the taxation. The presentation on the tax proposals will be delivered by Mr. Ranavira, Managing Partner, Ranavira Associates, and on the economic proposal and impacts will be delivered by Mr. Hulangamo, Partner and Head of Tax, Ernst & Young, as well as Vice Chairman of the Ceylon Chamber of Commerce. This will be followed by a brief presentations and a question and answer sessions with Mr. Gajendran, Senior Partner, Gachman Company, and Mr. Suresh, Principal Tax and Regulatory at KPMG, will be discussing about the personal and company taxation. Dr. Rajabaksha, Group Chairman of DSI, will discuss about the local industry and lean accounting. Mr. Premaratna, CFO, Brendix Lanka Limited, will talk about the apparel exports and stock market, while Dr. Makesa, CEO of Global Rubber Industries, will brief about the export and rubber industry. Role of the commercial bank will be discussed by Executive Director and CWO of HNB PLC, Mr. Dilshan. Former Director General Employees Federation of Ceylon, Mr. Veerasinghe, will talk about labor and employment. Mr. Sanath, immediate past president, the Hotels Association of Sri Lanka, and Chairman of Mount Lavania Hotels Limited, will discuss about the tourism. Mr. Chatna, Partner, PwC, and former Chairman, Celescom, will brief about the IT development. Session will be moderated by Mr. Sulaiman, Partner, Tax, Ernst & Young. I also warmly welcome the CMA President, Professor Lakshmanar Vattavala, Vice President of CMA and President of SAFA, Mr. Henaka Bandara, other council members, members of CMA, invitees, ladies and gentlemen. To commence the program, I have the pleasure in inviting Professor Lakshmanar Vattavala, Founder President of CMA Sri Lanka, to deliver the welcome address and introduction to the today's topic. Professor Lakshmanar Vattavala has led the Sri Lankan accounting profession, being the President of the Chartered Accountants, President, South Asian Federation of Accountants, and a Founder Secretary to the SAFA, Founder of WAT Sri Lanka and CMA Sri Lanka. He is currently a SAFA board member and chairman of SAFA International Relationship Committee. Professor Lakshmanar Vattavala, I am honored to invite you to deliver the welcome address.
Thank you, Mr. Gajendra, the chairman of the Taxation Committee of CMA Sri Lanka, our vice president, the other distinguished speakers and panelists, and also all our participants. Let me welcome you to the budget seminar that we are having. It's the budget 2023, and we are really going to discuss about the where we will have an analysis and of course the economic side that we are looking at. Now, if you really look at the budget this time, we have selected, of course, if you look at the speakers and panelists, we have given much focus to the economy. Now, that is what we thought that will happen. And of course, the budget presented by the Honorable President and Finance Minister has also given the same sort of emphasis because most of the budget matters were discussed very much earlier. So if you look at the whole budget side, I'm sure we have two eminent speakers who will handle those matters. And also on the economic side, we have the people who will be experts in the different fields who will speak on the how they can really face the challenges that we are having. Now, when we look at the budget, some of the things that I have noted was the Honorable President saying that he's expecting maybe within the next 3 to 5 years a high economic growth rate of 7 to 8%. Then the increase in the international trade as a percentage of GDP by more than 100%, which I think is a very, very good target. Of course, now our problem is how we are going to achieve it. And an annual growth rate of US dollars 3 billion from new exports. I'm sure we have invited some of the leading exporters. They should be able to tell how they are going to get this target, especially from the IT sector, the rubber sector, and the other areas that are there. Then the foreign direct investment of more than US dollars 3 billion in the next 10 years. Now, that's something that is required, but how with a high degree of skills. Now, these are all challenges that we are having. And of course, yes, we are speaking on them, but I think he really wants to ensure that action will be taken to correct this situation. Because if we do not correct it, we will be in serious problem. Because when you look at our figures, now I just want to give, because since we are in the financial accounting, in the management accounting area, the total expenditure of 5.8, I don't know, is it a billion or trillion? 5.8 billion, we'll say, and a total revenue of 3.4 billion and deficit of 1.2 billion. But what we have now seen is that there is improvement in our revenue. The revenue percentage to GDP is 11.3, but the thing is our expenditure has shown an increase. So like our businessmen paying more taxes, there must be a cut in the expenditure. So that's something that we need to take into account. But in addition to that, you will find that the interest on the borrowed capital is another big problem, about 1,000 billion or going on that one, you know. So we are really in a big crisis situation, but we can't say crisis, but we need to come out of this. So that's why we have now planned this seminar in order that we could speak on the tax area, then the economic area, because we've been able to convert one of our tax experts also to the economy, because he's been now taken over by the Ceylon Chamber of Commerce, the Deputy Chairman, Mr. Dubinda Hulangama. So he will also be speak, and then of course the two other tax experts who are there and the others. So I'm sure that we will be in store for a very, very good presentation and panel discussion, which will enable us to see as to how we are going to meet these challenges, especially to have a plan to repay these loans that have been taken. So with those, I would hand over to our moderator, to Mr. Gajendran, so that he can now invite the speakers. Thank you.
Very much, sir. Next on agenda is the presentation on the tax proposal, which will be delivered by Mr. Atula Ranavira, Managing Partner, Ranavira Associates. Over to you, sir.
Thank you very much. Thank you very much. We have a limited time period. Therefore, I will directly move to the presentation. I will share the document. Yeah. Today, our topic is Budget Highlights 2023. I have prepared a small presentation this time. When we take the budget, when we talk about the tax proposals, there are only very few tax proposals. Now, this time the budget is more towards addressing to the economic side of the country. Right. Now, first of all, we'll see the background of the economic situation of the country. Now, if you'll see the interim budget 2022, the interim budget 2022, it has given this type of statistics where the tax revenue to the GDP, it has come down in 2022. We have estimated that it will come down to 8% of the GDP. Now that is the situation. Then the government budget deficit, gradually it is increasing. It's an increasing trend. Then government debts to GDP is also in an increasing trend. Now we'll see a few statistics given in 2023 budget. Now this information I have extracted from the budget speech. Now according to this budget, the total revenue. Now if we'll see the 2023, the total revenue estimated is 3,415 billion. 3.415. Then what about the expenditure? Expenditure 5 billion, I think these are in billions, 819. Therefore, ultimately we are ending up with 2,404,000 deficit. Now this deficit, anyway, this time the deficit, now if you calculate the deficit to the total income. Now income, the deficit as a percentage of income, in 2021 we had 141%, then it has reduced to 2022 as per the budget speech. It reduced to 111%. Now we are trying to get it reduced to 70%. Now, as Professor also mentioned, now our biggest issue is to secure the income and managing the expenditure. That's the situation because we are running at a heavy budget deficit. Now, how this time they are managing to fill the gap of this budget gap, that is the deficit. Now, local financing 560, then overseas financing 1,844 billion. Now that is how they are going to finance it. Now, when we see this picture, our expenditure is much more greater than our income. How to survive? The one and only way, in long run, the one and only way is to increase the gross domestic production. In long run, we have to increase our gross domestic production. But interim periods, we can borrow money, invest, fill this gap and go on for a temporary time period. Now we'll see the tax proposals in the 2023 budget. Now, in this slides, I'm giving a small remark about 2022 budget, then the income tax proposals in 2023, then various changes, what they have mentioned with related to the VAT, SSCL, Tax Appeal Commission Act, Surcharge Tax, Betting and Gaming Levy, Casino Businesses Regulation Act, then Import Taxes, Finance Act, government fees and charges. Those are the main items which are there in the budget. Now, if you see the 2022 budget, certain proposals, what they have gone through 2022 budget or the interim budget even, are a few items are legalized and majority are not yet legalized. Right? Now, out of the things which are legalized, one main thing is increasing the VAT rate from 8% to 12% and 12% to 15%. Now, in the case of finance VAT, it is increased from 15 to 18%. With relate to other VAT, now the leisure industry, leisure sector, they had 0% VAT rate. They increase it to the 12%. Anyway, they removed this 0%. As a result, in par with the other businesses, their VAT rate increased up to 12%. That is in June. Then thereafter, again, that increased to 15%. Now the situation is 15% VAT. Then meanwhile, they introduced a social security contribution levy of 2.5%, where the turnover threshold is 30 million per quarter. 30 million per quarter. Right. Now, what are the items which are not legalized? Because we are waiting for the legalization of these things. Now, the Supreme Court has already given the determination on the VAT bill. They have given the determination confirming that the VAT bill, 2022 VAT bill, is not violating the constitution of the country. That means near future, most probably by about next week, government will be able to get this VAT bill legalized. There are two main things to get legalized. One is the VAT threshold, reduction of VAT threshold from 300 million to 80 million. Then removing of certain exemptions from VAT, which includes residential condominium apartments, among other things. Then, with relate to the Inland Revenue Act, the bill is challenged in the Supreme Court. There are 8 cases against the bill. 8 cases against the bill. Now, the Supreme Court is supposed to give their determination by about 20th of this month. Once they give the determination I think government will be in a position to legalize this by end of this month. But already the Attorney General has mentioned that the effective date of this will be with effect from 1st of December, not 1st of October. Right. Now, reduction of individual tax-free personal allowance, according to that bill, it will come down from 3 million to 1.2 million a year. Then individuals tax slabs, earlier we had 3 million slabs, now it will come down to 500,000. They are removing the expenditure relief of 1.2 million. Then the individual's tax rates, instead of 6, 12, 18, it will go 6, 12, 18, 24, 30, 36. Up to 36, it will increase. Then abolition of corporate tax rates of 14, 18, and 24% and replacing with 30%. Then treating corporate investment capital gains as a business gain. Once they consider it as a business gain, depending on that company's nature of the business, it will tax at 30% or even 40% in the case of liquor, tobacco, gambling, lotteries. Then in cancellation of several income tax exemptions, they have proposed several cancellation of the income tax exemption. Then the removal of special tax concession granted for companies that listed in Colombo Stock Exchange in 2021. The companies, there are 14 companies listed in Colombo Stock Exchange during 2021. And according to the existing law, they get 3 years concessionary tax rate of 14%. Now they are proposing to remove that, but most probably they will continue with this. Then reintroduction of withholding tax. Most of the withholding taxes are removed in latter part of 2019, and now they are reintroducing those things. Those are the things with related to 2022 Act, budget speech proposals and the legislations. Now we'll see about 2023 budget, which they have read on 14th of this month. Right. Now, income tax proposals. The tax exemptions, it says most of the tax exemptions tax exemptions they are proposing to grant on non-resident persons who are engaged in carrying out businesses where the projects fund of the government funding by 100% funding by foreign grants. If there are any government project where the funding is 100% foreign grants, if some foreign party, non-resident party come and carried out that business, then they get 100% tax exemption. That is one proposal. Then public sector employees tax cost. As we know, public sector employees are liable to tax. But in most of the cases, the cost is borne by the governmental institution. Now, this budget proposed that in future, those tax costs to be borne by those individual employees. Right. Then tax administration, with related to the tax administration, with related to the income tax administration, now under this section 139, when we submit an request for review, a request for review of an assessment. Now, Commissioner General, there's no ruling to say that the Commissioner General has to give his decision within a specified time period. There's a loophole in the law. Now they are rectifying that loophole by introducing 2 years time period. Then the commission, once he appealed to the Commissioner General, administrative level appeal, within 2 years, Commissioner General shall give the determination or opinion, their finalization. Then, but under another section, meanwhile, after 7 months of appealing, if we wish to, pending the Commissioner General's decision, we can apply to the Tax Appeal Commission. There's a provision like that. Right. Then further, if not notified within 2 years, it is deemed to have been allowed. That's a good sign, right? If the Commissioner General is silent on this matter, after 2 years, it is considered as accepted. Then measure to discharge cash transaction as much as possible. They are trying to discourage the cash transaction and promote the bank and card transactions. That is as a source of information for the taxes as well. Then introduction of a charter covering the taxpayers' rights and obligation. That's a good sign. Then introducing of Presidential Commission for Taxation. Then mandatory e-filing of all IT returns from next year of assessment. Then introducing KPI to evaluate the revenue collecting agencies' efficiency. Then appointing a tax ombudsman. This is long outstanding thing. Now they are trying to introduce that. Then publishing of a list of active taxpayer VAT registered persons in their website. Then tax audit and verification program. I think this tax audit and verification is also very much important. Now, continuation, the dividends. Now it says the interim period, because they wanted to have these amendments with effect from 1st of October 2022, but it will get delayed by 2 months, at least 2 months. During this period, the non-residents dividend income is making exempted. It is exempted. The bill proposed 15% as a final withholding tax, but until the law is legislated, for non-residents dividend income will be exempted. Then resident persons dividend during this period will be liable to tax at a maximum rate of 15%. I think this will be a maximum rate of 15%, but anyway, we have to wait for the law. Right. Then dividends paid out of dividends received is exempted from tax during this period. The dividend received out of dividend, declared out of dividend paid is exempted. Then, in order to have a proper tax income, definitely we need to broaden our tax base. It is mentioned here how they are going to do that. Voluntary compliances, then strengthening the laws, then various tax audits and tax verifications. Now we will move to VAT. Rationalization of VAT exemption with effect from 1st April 2023. In the English version, it says tax rationalization, but if you read the single one, it says exemptions. Most of the exemptions will be removed. That is what is, and will be removed. A VAT Consolidation Act. Now, for our VAT Act, there are so many amendments. Therefore, government is proposing to have a consolidated act. Then we'll move to Social Security Contribution Levy. It is exempting these items to be exempted from SSCL. One item, motor vehicles, where importing of motor vehicles, where we are paying the excise duty. Definitely, when we are importing, we have to pay excise duty, then there won't be social security contribution levy. Then commercial hub operation. Then equipment used by differently able persons. Then pharmaceutical products. Those things will be exempted from SSCA. Then tax appeal commission, with relate to the tax appeal commission, what are the amendments? Increasing the fee on appealing to the tax appeal commission up to 15,000 rupees. Now 2,500, it will go up to 15,000 rupees. Then appealing to the tax courts. After the tax appeal commission, we can appeal to the tax courts by either party. Then the current fee is 1,500 rupees. It will increase up to 10,000 rupees. Then when we are appealing to the tax appeal commission, we have to give a bank guarantee. Now, this particular bank guarantee, the validity period as per the existing law only 2,270 days. It will increase up. The time period will extend up to the determination of that case. Then surcharge tax. This is a special thing. Impose a surcharge tax on importation of diesel, petrol, crude oil. On these three items, now the surcharge tax is applicable. It is through a gazette notification, it is applicable. Then betting and gaming levy. In the betting and gaming levy, they are proposing to expand the definition of bookmaker. Now, into this definition, they are trying to include everybody who are involved with this, include the person who receives or negotiates bets from on all types of sports, including online betting. The most important part is including online betting, right? Then introduce a licensing mechanism and a fee for these bookmakers, right? That is to increase the revenue of the government and to make it licensed, administrated, right? Then casino businesses. In the case of casino business also, the definition of casino is to be changed to include online gaming and casinos, to include the online gaming and casinos. Then introduction of regulatory and licensing requirement on these basically online casinos, because the online casinos, it is very difficult to control. Therefore, there has to be some type of a control over that. For that only they have introduced this. Then import taxes. Import taxes, that is basically import duty. Revising the import duty, at present we have a unit-based import duty rates on certain things, like small garment items and all. Unit rate is there, per piece 50 rupees or something like that. Now they are going to increase those unit rates. The revising, it says revise, but in single one it says increasing. That means they are trying to increase the unit rate duty after considering the devaluation of money. What I can't understand, when they are increasing the taxes, they consider the devaluation, but that is for the revenue collection. But for the income earners, how the income earners are managing. Now, individuals, now cost of living has doubled, then at least 75% increase. But how they are going to manage, that is a question. Here they mention to match with the money devaluation, they are increasing the duty. Then implementation of HS code. This is a new HS code 2022 that they will be include into our tariff system. Then revising the current duty band of 0%, 10%, 15%. At present, we have three bands duty system, import duty system, 0, 10, and 15. In future, it will be 0, 15, 20. 15, 20 increasing. Then we'll cover the Finance Act. Consolidation of commercial hub operations. Now, this commercial hub, the international trade, this is very much important for international trade. After recognizing that importance of that, they are trying to consolidate this commercial hub operations also into the Finance Act. Then inclusion of bunkering services into commercial hub operation. At present, the bunkering service is not in the commercial hub operation. After noticing this, a lot of professionals were requesting for this. Now they are addressing to that. Then granting of SDP Act, benefits to identified commercial hub operations. Now, by doing this, as you know, SDP Act can grant a lot of tax exemptions and concessions for a lengthy time period, not exceeding 25 years. Now, those benefits are the highest tax benefits available in Sri Lanka. But now therefore, these commercial hub operations are also, they are recognizing under the SDP Act and give these tax, then they can grant the tax exemption for those things. That's a good sign in a way, but only in this the SDP Act operation, that in the law, there are weaknesses because minister has supreme power on that. That shouldn't be there. This is a common issue in our Sri Lanka laws. In a lot of laws, import duty, STP Act, then even VAT law rate changes, and a lot of places in our acts, the ministers are given more authority. There shouldn't be this type of situation because some ministers we have noticed that they misuse these authorities. Then government fees and charges. They are proposing to increase the government fees and charges where the fees and charges are not revised during, revised meaning increased during the last 3 months. They are proposing to increase by 20%. Yeah, my time is also getting over, only 2 minutes more. Now, on behalf of CMA, I would like to thank everybody for participating in this session. If there are any questions at the time of question and answer session, I will participate to answer those things. Thank you. Thank you very much.
Thank you very much, sir. Next on agenda is the presentation on economic proposals and index by Mr. Pulangamua, partner and head of tax, Ernst & Young, and vice chairman, Ceylon Chamber of Commerce. Over to you, Mr. Pulangamua.
Thank you, Gajendran. Good afternoon, ladies and gentlemen. Professor, I must first apologize. I don't have a presentation to show on screen due to time constraints. I could not do that, and I had a personal circumstance which prevented me from doing all that. So, yeah. So as you said, Professor, I have transformed myself from presenting matters of taxation generally after a budget and anything to talking more on the economy. I'm not a qualified economist, but my role has got me used to analyzing matters of that nature because of my involvement in the Ceylon Chamber. So thank you again for inviting me for this presentation. So first and most, I must say that, you know, when you talk of the economic impact of the budget, first I must say what a budget really envisages. Actually, the budget is the appropriation bill second reading. The first reading of the appropriation bill is where the Minister of Finance places before Parliament the expenditure allocations for the next financial year, that is year 2023. And the second reading of the budget, which he presented in Parliament last Monday, is where he will pronounce the revenue proposals and how he's going to match the expenditure with the proposed revenue. But traditionally, in making this budget, presenting the appropriation bill, the ministers of finance in the past, since the last 30, 40 years probably, has been also used in the budget to spell out the economic policy of the government, both for the next year as well as for the medium term. Now, if you read those if you read the budget speeches that have been made over the years, I would say last 25, 30 or even more, you feel, okay, by end of the year, our country will be a developed country like Singapore. It's very flowery in terms of the words used and the plans, the gorgeous plans they have for the country. If they actually even 1/10 of it was realized, this would have been a different country by today. So all the budget speeches are generally confined to paper and the speech, and the implementation of such proposals are very seldom, maybe not even 10% of the speeches are realized. So that is because the speeches are all written with very laudable and broad objectives, like in this year's budget. So that is why as the launch chamber, when we issued our statement this morning, our press release, we very clearly said that the budget is the right direction, but success of the budget will all depend on how good the implementation is done. So as you know, this year's budget has an increase of revenue of 64%. I think Atul also just put the figures on screen. Thank you, Atul, for that. So I don't have to do that. And the 64% increase of revenue. One might wonder, okay, how can the country increase revenue by 64%, especially when we are expecting the country to contract by at least 8% next year. So in a contracting economy, how can the revenue go up by 64%? I guess the answer to that, which I've received so far for the government, is that part of that increase will come from the increase of taxes of both corporate income tax, which you all know what the rates are like. They are fairly significant for individuals as well as for the corporate sector. And secondly is the inflation impact, because when inflation running at 30–40%, it is obvious that government revenue is also based on those inflation number and on the real number. So that's the reason why the 64% increase of both revenue. As for expenditure, there is 37% increase. As much as we would like to have seen a reduction of expenditure, there is a 37% increase in expenditure, but of course that again I think is largely inflationary. And also there is a allocation of 1.2 trillion for capital expenditure, but I don't know if the government can afford to spend 1.2 trillion in terms of capital expenditure. So in the end, all these expenditure figures that are given here are not based on zero-based budgeting. It is not based on how we do in private sector, where we take last year and this year to a zero-based budget to see the necessity for an expense. But the government budgets are based on last year plus 10% something like that. So actually, although such money is allocated, you might wonder, okay, how can we bridge the deficit? I think after that question, we have a 3.4 trillion income, both tax and non-tax revenues, and expenditure 5.8 trillion. So how do you bridge these 2 trillion? So largely it is sometimes some of these votes are not actually spent. All the allocations that are actually spent. So money is spent based on availability of cash. So some of these budget expenditure will actually not materialize. So I hear a lot of people are saying, why is the government reducing expenditure? Why can't expenditure be cut? It has gone up by 37%. But how I look at it is that the expenditure, yes, it has gone up by 37%. Inflation takes part of it. But the real expenditure that will be shown in the budget actually may not be really spent. So that is my analysis of how the expenditure is done. So overall, government is expected the revenue to go up by 8.3 from 8.3% GDP to 11%. Our target is to 15% by 2025. As you know, the IMF target is to have a 2% surplus on the primary account. That is, our total expenditure this year is 5.8 trillion, of which interest is 2 trillion. So interest expenditure current year is about 1 trillion. It has gone up to almost 2 trillion, double from this year. The reason being, you can see the domestic interest rates at about 31%, 32%. So obviously interest cost is going up. So if you take the interest cost out, you arrive at the expenditure, recurrent expenditure plus capital expenditure minus the interest cost is what is called the primary account. So our target is to get to 2.3% surplus the primary account by 2025. So last year we were minus 4%. This year we have about 400 billion, which is about 1%. So I think if these projected numbers do materialize, then they will be increasing the primary surplus, a primary account. So how does it impact the economy? That's the role that I have to play here. So if the Sri Lankan economy has always been dependent on bridging budget deficits through borrowings, externally or locally. And every budget that we presented in the last many years has something that they give to the people in terms of subsidy or free. Either it can be fertilizer, it can be flour, it can be bus fares, it can be something. So always it is based on freebies or something that you can subsidize and give. So these subsidies, this free delivery of goods and services has led to the current crisis, which has ended up as defaulting on our debt. So the government needs to get out of the situation of debt default and becoming a debt serviceable country. So in order for us to service our debt, then we need to have a strong primary account. So only the primary account is in surplus, that there's indication that we can meet our interest obligations. And that is the reason why it is going towards that way. Now, if we are unable to have a surplus on a primary account, then it means that we can't service our debts. So which means that we cannot borrow any further from international organizations, but we have resort to domestic borrowing and money printing, which will result in inflation and which will result in erosion of the entire SME sector, because the interest rates cannot be afforded by the SME, and then to deprive credit to the private sector. So with all those consequences that there, if we do not have fiscal discipline, and where we are able to meet at least 12, 13%, 14% of our revenue as a percentage of the GDP. So it is in that direction. So I think the impact economy will be costly in the, my reaction will be costly in the short to medium term. But if these goals are realized, and if people accept these targets given by government as temporary measures in order to stabilize the economy, and then we can stand on our own feet thereafter, then the economy will sustain and develop and be on a growth path from that point. I cannot see the economy growing in the next year as expected the government also, but if we let the foundation correctly, where we get our revenue correct, we get our expenditure correct, we have our deficits correct, then I think we can go on a growth path for this economy. And that is the base on which this budget has been prepared. You can see there are no expenditure allocated to increasing the additional subsidies and items that are given free of charge. So that if we subsidize people, we as taxpayers will have to pay that. So we have a choice whether we are going to pay high interest rates or high taxes. Currently there are both. That is because we are in a stabilization stage, but at least some point of time where we can remove one thing and replace with the other. So that is the path. If you look at the revenue and expenditure, that is the part taken by government. They also have to meet an IMF target, because we need to get the IMF approval in order to get the support of bilateral lending organizations, multilateral lending organizations, for us to reach our budget deficits in the medium to short term. Because even with this kind of revenue, we are unable to still reach the gap. So our development, our capital expenditure requires support from bilateral multilateral organizations. That can come only once IMF gives the green light. So I know I come from a tax background, that it's costly, it's difficult, that these tax rates may not be sustainable. People might say, okay, we can't afford to pay, others are much lower than us. For example, if you take the rest of the region are offering low tax rates to Sri Lanka, so they are more competitive than us. All that is true and fine, I agree, but I don't know that we have a choice in this matter. When we have to get 100 of income, if we give a concession to one, the other has to pay more. So that is how it will work with the tax system. So the difficult times, but that is how the budget has been prepared. Now getting into the, so that is the revenue and the expenditure side and the target set by government. So the impact to economy will be costly in my view to businesses and economy. Cost of living will go up, but we hope that if numbers improve, stabilization happens, then by end of next year, at least we can be on a growth trajectory. Now, with regard to the rest of the budget, what the president has announced is largely to do with the reforms that has been done to the country in order for it to go on a growth path. The first mention is SOE reforms. As you know, SOEs are bleeding. I mean, it's a very hackneyed topic at the moment. The SOEs that bleed, all of you know, I don't want to mention names of SOEs here. And these bleeding SOEs actually are a burden to the taxpayer, because if the SOEs can't sustain on their own income, they can't stand on their own feet, then someone has to finance them. And what has been happening over the past years is that we as people, everyone has been financing the loss-making SOEs. As a result of that, they become inefficient, ineffective. Two, they become non-sustainable. So that is what has happened to now. So therefore, the government has very clearly announced that the SOEs will be reformed. Reform means it need not be a sale of 100% shares from the government private sector. It can be a partial sale, it can be reorganization, it can be unbundling of the CEB, it can be cost plus pricing. There are a whole scheme of things that need to be done in the reform program. And I must say, a part of it is already implemented, at least the cost plus provision of service for electricity, fuel, water has already begun. And those reforms are eventually, in my view, and have to be done. So SOE reforms can happen on all those ways. Secondly, if SOE reforms also do happen, where there's a sale of government enterprises, where the government feels that there is no need to keep an enterprise because there is no national security, there is no threat to public, and therefore these things can be given to private sector, then those will be more efficiently managed and a better service given to the people. And also, there will be a proceeds from those sales, and if they can get dollars or foreign currency from the sale proceeds of the SOEs, they will also fill the coffers in terms of our foreign currency reserves. So there are a multitude of benefits that can come to the economy if the reforms are executed as soon as possible. We can't for long, we need to do it when the people are also prepared to do it. And as a Ceylon chamber, I can tell you we have spoken to all political parties in parliament, and all of them are unanimous in their, whatever they say in public, they are all unanimous to us that there has to be a SOE reform process, and they are fully supportive of that process. So the second one is the unlocking of state land. As you know, this has been a call that we've been all this time. The JDB SPC has enough of land, uncultivated, abandoned in Kurunegala, Matale, and Kent districts. And the government decided to allocate these lands for agriculture primarily, so that we have food security, and also we get what is called commercial scientific agriculture. So they are going to identify blocks of 1,000 acres, especially in Kurunegala, Matale, Kandy, all those areas, and try to see how private sector can come and use these lands in order to increase agriculture output. So, so that also have benefit to the economy if private sector can get involved. Because as you know, the plantation sector reform was one of the most successful reforms that we did in this country, and it has had tremendous benefit to the country. And therefore, if these state lands that are unused can be unlocked and given to the private sector, especially in dairy farming, there's a big request from international operators to operate dairy farms in Sri Lanka. And what they say is that the land area, unit area is too small at the moment. Therefore, there will be vast areas of land that are allocated for dairy, so that it can be run on a more cost-effective and profitable method. So I think there are those FDIs also can take place if lands are open up to the private sector. The next more important things on labor reforms. Of course, successive governments have mentioned this, but labor reforms are an essential part of attracting FDIs. As you know, our labor laws are very one-sided. They are only looking at employees. Of course, you can't blame a country where there's a lot of people living under poverty lines. We need to protect the vulnerable, but at the same time, we have to make sure that our laws are competitive, modern, in order to meet the challenges of the future. Therefore, the labor laws also will be reformed. Kanishka is there. I think in this panel, he can say which areas to look into. And those labor reforms, there is a group appointed to reform the labor laws in the country, that they are becoming more flexible in terms of exit and entry for FDIs and local investments, etc. Then another more important thing is on government expenditure. So I touched them briefly. We have made fervent requests from the government that the government expenditure has to be either curtailed or on a path that doesn't increase. So as you know, we have 1.5 to 1.6 million government servants. You can't put them on the road the next day. I mean, a lot of people are saying cut the government expenditure. as you know, our recurrent expenditure, which is about $1 trillion, are non-discretionary expenses. So of that, for a total expenditure of recurrent expenditure of 4 trillion, 1 trillion is for public service salary, 1 trillion is for pensions, subsidies, and transfers to loss-making enterprises. Another 2 trillion is for interest. So you can see it's very easy to say cut government expenditure is a very call by a lot of people, but you know, these are all non-discretionary payments. I don't think there's much discretion involved in cutting government expenditure. So, for example, 1 trillion of government servants, 1.7 million salaries of government servants. You can't put them on the road the next day, right? There will be a revolution uprising if you put them on the road next day. So there has to be a planned reduction of government servants. It can't happen overnight. So it has to be something restructured over a period of time. And then what the government can do and is doing, I was told, is they are going to put a stop on recruitment. They already issued a circular, public service circular. I heard they are going to pass a law which prohibits more recruitment. So they can restrict the recruitment of government service beyond what it already has. Secondly, is the interest cost is 2 trillion. There is no way that can be cut down because there are interest obligations to pay. Another trillion is for pensions and subsidies. So these are all very non-discretionary payments that they have and very difficult to cut down overnight and immediately. So what they can do is that the trillion that you spend on pensions and supporting SOEs can be reduced over a period of time by getting to contributory pension schemes and cutting down on subsidies over a period of time. So, but that also can't happen overnight. So these are the difficulties the government is facing. I thought I'll put that side of the coin as well to you all, because since we talk to government, we know both sides of the coin. So it's not easy. A clarion call is made. It's not easy to cut government expenditure overnight. So having said that, we are told what they told the government is that you need to make sure at least you don't increase the expenditure, go beyond what you already have. Cut the price sabas, cut the project councils, cut the layers. It's a request that they made so that you need not have so many people in these institutions. So that will happen over a period of time, but not immediately. The other progressive proposal we see in the budget is the priority for exports. Hasida can talk. The government's plan is to increase export by $3 billion a year. Now that is a very ambitious target. I know our maximum increase has been about $500 million to $1 billion a year in terms of export earnings. So $3 billion requires a lot more of marketing, infrastructure development, etc. That needs to be done to get the exports up. Then also there's a proposal to set up 4 zones, and I'm aware that these 4 zones will be set up by private sector or by government by providing infrastructure facilities. So these are zones that will be exclusively for FDIs, like the GCC, same concept as when GCC operated many years ago, where you get FDIs into these zones, and then the zones will operate without any hindrance from local laws. So most local laws will be exempted in the application to these zones, and the plan is to put one in Hambantota, Trincomalee, Kurunegala, and in Central Province. So that will also, if that can happen immediately, if that thing can go on, then therefore there will be benefit to the areas. Our exports will grow. So the idea is to get to exports by $32 to $40 billion exports in 2030. So that is a target, and that at least you must plan for now to get to that level of export earnings. And the other is to make Sri Lanka a very competitive destination for international trade. As you will agree, Sri Lanka has 22 billion population. So if you are going to propel our growth to the next level of development, like Singapore, Hong Kong, those countries, we cannot depend on domestic industry. We can't domestic manufacture. That is good to service ourselves, but we can't take growth to 5, 6, 7, 8% and become a Singapore or Hong Kong if we depend on domestic manufacture only. So we have to get international trade. We have to make Sri Lanka a hub for international trade, for logistics, for shipping, and also increase our export earnings and become a hub for import-export operations, and take that beyond the GDP, at least to 100%, at least 160% of GDP, if we are to go to the next level of development. Otherwise, if you always do domestic manufacture, agriculture, that's not going to suffice. We need to get to the next level. So international trade is important for us to propel to the next area of growth and prosperity. So those are my observations on the budget. One more big observation I saw is education reform. There's an emphasis placed in setting up new universities, changing the curriculum, changing the aptitude level exams, changing the administration policy, changing postgraduate studies. I think this is a very important area. I think we need to look at our university system, our education system. Are producing graduates that are required for the present economy? So I think there's a good proposal in that area where they're trying to look at education at high level, at high education levels, entry levels, postgraduate levels, new universities, new medical faculties, extension to the KDU. So a lot of emphasis is placed on higher education and improve education to produce the people that we need for the future. So having said all this, my observation is that all this super fantastic, everything is good in terms of proposals, but success of all will depend on implementation. How do we get our exports to 30 billion? How do we increase it by 3 billion? How do we get FDIs to 32 billion by 2032? A lot depends on how fast we can make the reforms, the necessary reforms, and bring the people. For example, today I had the opportunity of meeting a delegation from Singapore who are very interested. I met them with the president. They are very interested in investing in our infrastructure, in our ports, in tourism, etc. So there's a lot of interest, in spite of the fact that we are defaulted the debt, for them to come and invest in large scale projects in Sri Lanka. So I think we should therefore do the programs and reform necessary to attract these investments and take this country from where we are today. So we must become a country that stands on our own legs, in my view, and that is our fervent hope as well. So those are my observations on the budget and the impact of economy. And I hope I was able to make some contribution to you. And if there's any question that you need, I'll join this Q&A session and take at that time. Is that, I think I have stuck to the time available to me, Rajat.
Thank you very much. Next on the agenda is the panel discussion and a question and answer session, which will be moderated by Mr. Sulaiman, partner, tax, Ernst & Young. Joining us as panelists are Mr. Gajendran, Mr. Suresh, Dr. Rajabaksha, Mr. Premratna, Dr. Mahesa, Mr. Dilshan, Mr. Veerasinghe, Mr. Sanath, and Mr. Channa. We invite you to send your questions using the question and answer session. Over to you, Mr. Sulaiman.
Thank you, Mr. Gajendran, and thank you to Dr. Professor Watawala and CMA for inviting me to moderate this panel. I also like to welcome all the panelists who were introduced by Mr. Gajendran. So the format of this panel discussion, I think, would be that we will invite each panelist to give a few comments on their take on the budget in the areas designated to them in the agenda. And then we can stick to about 3 minutes each. Thereafter, we will move to questions, a discussion on the panel, and then we'll take the questions from the floor as well. So starting off, can I invite Mr. N.R. Gajendran to give his initial thoughts on the budget in the area of personal and company taxation. Mr. Gajendran. Mr. Gajendran, you're on mute. Right, until he joins, Suresh, are you able to start?
Yes. Hello.
Yes,
Can
can
you
hear
hear
you. Yes, can.
Yeah. Let me begin by thanking Professor Watawala for inviting me to be a panelist to address this gathering. And within a short period, let me give my take in relation to the budget. Yes, now strictly from the perspective of taxation, we don't have much to speak about because the tax changes are very, how to say, that we don't seem to have that many tax changes other than, okay, there's a new tax in relation to fuel, diesel, petrol, and crude oil surcharge tax has been introduced. So other than that, and something in relation to betting and gaming and the casino business act, etc., we don't see many new tax rules that are coming other than there. Right. So the reason for that is because we have seen in the interim budget from the period starting from month of May, we have seen certain tax changes that have been introduced to both income tax regime and the VAT regime. So those rules are actually, how do I say, are significant, and those are to be implemented also. So it is, I believe that's the main reason why we don't have many tax changes in the budget. But at the same time, we do find two complement, two, I would say, welcome measures in the budget in relation to tax. First one is the proposal to introduce a presidential taxation commission to study the entire tax regime in Sri Lanka and to come up with reforms and new structures, etc. So this shows the willingness of the government to study and understand and to and the appreciation that we need a thorough study with regard to the tax regime in Sri Lanka. So now, having said that, we know when we say commissions, most of us don't have much faith with regard to the results that come from the commissions. And I hope that it won't be the case here also, and this will lead to positive results coming, and that will benefit the tax regime as well as the Sri Lankan economy. So what should happen here? I think maybe something that I personally expect from this presidential commission is to identify that there is a lacuna in relation to tax policy making process in Sri Lanka, and that we need to have a robust ecosystem in relation to this. So how should that happen? Well, at the finance ministry, I believe there should be a separate body or a separate committee in charge of tax policy making, and this is something even the IMF is recommending that the countries should have. And according to the IMF recommendation, they use the terminology tax policy unit. A tax policy unit, according to a particular structure that they have recommended to be there in a country, is what they also expect. And I think it's a good thing if we have that. That will result in the country's tax policy making becoming more robust, rather than basically a tinkering taking place happen at the moment. Right. The second one that I see is the appointment at the reference to tax ombudsman. Now, here also, again, while it's a welcome move, I have to say that this same proposal to introduce a tax ombudsman is there in the 2017 budget speech also, alongside with the proposal to introduce National Tax Council also, which did not happen. So I hope that this will not be the result for this proposal also, that it will be implemented. And when we proceed to implement this, again, we have to learn from the past. In the past, we did have a tax ombudsman, but who was created by a cabinet paper that was presented at that time. So in other words, there was no proper constitution for this tax ombudsman to operate in the past. So as a result, the findings and observations that tax ombudsman arrived at after listening to the grievance of taxpayers, he was not in a position to give any relief. He was not in a position to enforce because he did not have any, how do I say, legal enforceability because of the lacuna in the framework within he was appointed. So what should happen here at this point is, when the tax ombudsman is being created, that should be by way of an act of parliament defining his powers and the enforcement mechanism specifically given, so that the shortfalls in the past will not be repeated. And that should also have how do I say, proper succession from one ombudsman to another appointment of another ombudsman, which again was a lacuna in the earlier system. There was Justice Maxwell Paranakama, I can recall, who was the ombudsman appointed under the previous scheme, but after his retirement, there was no provision. There was no, how to say, statutory compulsion for the government to replace him or to substitute a person for him, and then it was the entire office of the tax ombudsman abandoned because of that. So that will not happen if this framework is created by way of an act of parliament. So those are two positive things that I look to the future in relation to improving the tax system in Sri Lanka. Right. In relation to personal income taxes, I think the question that everybody is asking is when are these reforms going to get implemented? And I think in the presentation, Mr. Ranavira pointed out, due to the Supreme Court decision, personal income tax will also take place from 1st of December, alongside with the removal of the VAT liability applicable to VAT liability applicable to residential condominium properties. Right now, my question is, what is the date today? Today is 16th of November. Is there enough time for the Parliament to pass this this statute? Now, in relation to the
just to interrupt this, there is a specific question on that for you in the next round. So shall we push that to the next round?
Sure. Sorry. Yeah.
Just have an initial quick chat first. Mr. Gajendran, are you available? We can't hear you. You're on mute. Yes, Mr. Gajendran, your quick take on the budget. We have about 3 minutes for each panelist. On the tax side, if there is anything you would like to highlight very quickly.
There's basically all the tax have come before the budget. We had four stages of introduction of taxes. 31st of May, when the Prime Minister's media division released the first tranche of introduction of taxes or increase of taxes. Then we had in August the interim budget. In October, we had the Inland Revenue Bill, which, as Suresh said, still in Parliament. And finally, with this budget, there are certain no major income taxes or specific indirect taxes, but fees and levies and things have been imposed here. Of course, there seems to be a fundamental change. I thought we were very serious about exemptions being not granted at all, right? It is becoming a little bit of a joke now, because here again we are going back to sort of the licensing Raj or regime, where even foreign projects, government undertaking, foreigners undertaking out of foreign funded foreign project, again it has to be sort of a classified under strategic development project. The exemptions are going to be granted. So I wouldn't know how even the lending institutions, the multilaterals are going to look at it. Again, we are going back to the exemption, and that is not small scale exemption. It is going to be large scale exemptions. And my personal view, the strategic development projects exemptions is all touted with malpractice and corruption. On the expenditure side, unfortunately, which is fundamentally, if we are going to have make the budget efficient, we have completely overlooked the expenditure side, other than speaking of the Inspector General and a new suggestion of new proposal of the act. I wouldn't know how accountability is going to be brought in for expenditure management. There seems to be overarching emphasis on imposition of taxes or increasing of taxes. Even the Presidential Commission is being appointed with the view to taxation commission is going to be appointed. I think if you read between the lines, it's to strengthen the tax revenue base. If you see even on the case of one core matter that this country has to get rid of, or deliberately, consciously deal with it, is the corruption, and dealing with the shifty politicians. No focus has been made at all, other than in one paragraph, I think paragraph 34, passingly just mentioning on the word corruption has been mentioned only once in the whole budget, I believe. Unless we are going to focus on this, we are not going to come out of this bankrupt status any soon. So it is something that all of us have to look at, and even the institutions, institutes, chambers have to, Institute of Charity, other institutions, non-governmental institutions have to also bring it light and emphasize it. Otherwise, we are going to have it burst.
Thank you, Mr. Gajendran. Moving on to Dr. Kulatunga Rajapaksa, your quick take on the budget from the perspective of local industry and lean accounting. Doctor, you're on mute. Dr. Rajapaksa.
Thank you very much, Professor, for allowing me to be a panelist in this session. I will focus myself on the industrial side of the proposal that I made. The most important part is the phased withdrawal of cess. This has been talking point on many times when the FTA negotiations are going to take place, and this time they said it will be phased withdrawal. So all the industries are worried about the phased withdrawal because the cesses were introduced to prevent import dumping of low quality products and under-invoicing. But then later there's another clause that has been introduced, unit rate custom duty. I think unit rate custom duty probably may look after this part of the under-invoicing if that can be implemented properly. So that there's we need a clarity on that.
Doctor, we can't hear you. Dr. Rajapaksa? Dr. Rajapaksa, can you hear us? Right. Dr. Rajapaksa, we didn't
Can you hear me? Can you
yes,
hear
can
now?
hear you now. Yes, can hear now. Yes.
Yeah. Now, apart from that, there's a duty duty rates have been increased by 5%. That 15% one had been increased 5%. That may be due to probably to safeguard some industries. But at the same time, there's another two issues that have been introduced. I don't know how it can be worked out to pay the 3 months salary for private sector, those who lose employment. The practicality of it, that's I don't know. Probably this may be introduced because there were loss of employment due to COVID pandemic. That may be the reason, but implementation and the transparency of that is not very clear. That I don't know how it will be implemented. And there's another proposal that we brought in. I wonder whether that will be a burden to the private sector, ensuring the private sector employees. But they have mentioned that it will be partly financed by ETF. How far it has been done, we don't know. As far as the industries are concerned, already they have a serious cash flow issue because of the increase of VAT, social security tax, by bank interest and all that. There's a serious cash flow issue for most of the industries. So therefore, I think this one, I hope it will not be a burden to the private sector. If it will be managed by the ETF contribution, that would be a bit. Then other parties, there is a proposal to broaden the tax base. But I have not seen how it has been done. It can be because already the present tax scheme is taxing the existing taxpayers only now. So if that can be broadened, then of course there's a collection can be done. Then there's another matter that we brought in to bring the unorganized sector, the black market, with the tax net. And they mentioned that the cash transactions will be to do by the banking documents. But if they did not very clear, if they can indicate the limit saying that any transaction over 2 million, now 500,000, to be done through a banking document, there will be a strong possibility of taking the broadened tax rate. But that has not been sort of surfaced. Then other thing is, promotions have been made to promote the exports. Exports, of course, earn dollars, but at the same time, the local industries are saving dollars. So dollar earned and dollar saved must be equally treated at some point. The only relief that I have is assembled motor vehicles will be relieved from SSC provided there's a 25% value addition. So that means that's an opportunity for some local manufacturers to provide spare parts and other parts to motor vehicle assemblers, so that that industry can be developed. These are the few things that that I can mention. Thank you very much.
Thank you, Dr. Rajapaksa. So interesting points there. Yeah, all these on the insurance, whether that will be a burden or that will be absorbed, and that's something industrialists are looking at to see if cost of employment is going to go up as a result. Hasita, your comments from the perspective of apparel exports and the stock market. You have 3 minutes.
Yeah, first of all, thank you for having me at this session. And I think I'll first touch briefly on the apparel export side because there isn't too much really directly connected to the apparel industry that's been spoken about in the budget this time. Of course, other than the tax rates, which got increased in par with other industries in the interim budget August. Of course, when you look at it from a macro standpoint, I think what we have seen is that the global economy has seen somewhat of a slowdown. So Duminda was mentioning earlier about the plan for a $3 billion increase in the export industry. But in the short term, especially in the next calendar year, we can expect a very challenging market environment, both in the US as well as in the Europe for exports, particularly because those economies have seen slowdown, and some of our retail brands, which we supply to, have built up strong, high level of inventory, and that has led to a global slowdown in the apparel supply chain right across, be it in Sri Lanka, India, Bangladesh, China, all over. So that's a immediate hit that is coming up actually in the next year. So we will have to weather that storm, and probably before it picks up, there might be a slowdown. And that's something that we need to be conscious about and plan ourselves for that. So that's going to be one of the key things that need to be considered, particularly looking at the growth and the foreign investment aspect of it. The other thing I wanted to touch was mainly related to the fund allocation. It has been mentioned as to create a conducive investment friendly environment. Now again, the details are not in it, but obviously this is more of a statement at this stage, but need to get further elaborated to see what exactly this means, because this is a very important part. Because I think when we looked at the foreign investors' reasons for they may not want to come, or the reasons or the main criteria they look at when they make investments into a country, one of the main things that come at the top is the stability and that investor-friendly environment. So that creating that environment will require not just probably an entity or a combination of entities to do that, but also it will require a significant amount of change in terms of the approach how we take and the policy consistency that will come through for foreign investments, which is a very important aspect at this stage. Why I'm saying that is because with the currency depreciation, in the short run, of course, we've had a sharp inflation as well in the country, but to a large extent, we still have competitiveness in the industry from a cost perspective regained to some extent because of the depreciation in the currency. But having said that, for that to materialize, the inflationary conditions have to ease off on one side, and on the other side, there have to be that conducive environment for particularly investors to come and make a new investment and expand the capacities in Sri Lanka. So that's another very, that's why it is important that at this time for us to really capitalize, not necessarily only on apparel I'm talking about, but it can be for any other foreign investment into industry. It'll be good on one side, the timing, given that the exchange rate environment, but then having said that, it also has to be supported by that friendly and business friendly environment and stable policy framework, which is absolutely needed. The third point I wanted to touch on was related to more the infrastructure. Again, we've been seeing in the last few budgets on a continuous basis, we've been talking about establishing new export oriented manufacturing or industrial zones. And looking at the current capacities of the industrial zones in Sri Lanka, mainly the Board of Investment zones, most of them have maxed out. particularly the availability of water and the discharge of water. That capacity has mostly maxed out in almost all the existing BOI zones, which has been a clear hindrance for expansion and growth in the textile industry in particular, which is a adjacent vertical connectivity when it comes to apparel industry as a whole. So I think that's very important that these infrastructure related investments are made. Of course, it's good to talk about new zones. We have a Ravur new zone coming up in the East Coast. But more importantly, I think the existing zones, say Biagama, Abisavella, etc., which have already the water capacity or ability to extract water and discharge water back, I think expanding those capacities, at least to some extent, will give immediate pickup. Because we are hungry for exports, we are hungry for the dollars at this stage. So establishing new zones will take a lot of time. But if you look at really the constraint of water, which is the biggest constraint in these zones, at least if some money can be allocated fast to expand the water capacity and the discharge capacity, there may be quick sort of expansion that will come in, particularly on the textile side. Because at this stage, we have couple of opportunities. While I said earlier that the West is slowing down, the markets are slowing down. On the other side, the positive side to the story is that there is a lot of offload of apparel manufacturing happening from China in particular because of this US banning the Chinese cotton, the Xinjiang cotton issue famously known as. So with that, there is opportunity with the offload of orders from particularly on the textile manufacturing from China to elsewhere with this localization and regionalization to expand the capacities of textile mills. But today, if you look at the textile mills are hungry to expand the capacities, but unfortunately the water availability and the discharge of water back has been a clear bottleneck. So I hope that some of these funds that have been allocated to the new economic zones or industrial zones, industrial zones would ideally be used to also augment the existing zones bottlenecks so that we can have a quick pickup there as well. So those are the main points I wanted to touch on the apparel side of things. And of course, on the capital markets, again, I think I'm running out of time, but very briefly, I don't think there are any direct major impacts that we need to talk about. But of course, all the listed companies' profitability will be challenged with the taxes that have been increased over the last few months through different interim budget and other changes through the bills. So that will have an impact on the overall valuations of the market. Rather than that, there are no direct specific areas to cover on that front. So that's a quick synopsis, Suleiman.
Thanks, Asad. Moving on to Dr. Mahesha Ranasoma on the export industry and rubber industry specifically. Dr. Ranasoma, a quick synopsis, please.
Yeah, thank you very much. I think Hasita touched on a lot of things in relation to the export industry, so I'll not repeat most of the things he touched on. But if you take the rubber export industry, it's $1 billion revenue earner for the country, and that's about 8% of what we earn in terms of total revenues, export revenues. This industry also contributes approximately 65% local value addition, and we are known. Sri Lanka is known to be the world's top performer, top +1 player in terms of solid tire production. We actually produce about 25% of the global demand, so we are a #1 player. Plus, when it comes to gloves, we are like #5 player with about 5% global market share. So it's a very extremely important industry, and there are plans that have been talked about in the past to the rubber master plan to increase the rubber sector development and rubber sector revenues, passing $3 billion per year by the year 2025 or 26. But we are still hovering around the $1 billion export revenue mark. This industry, therefore, has a lot of potential to grow. But when we look at the budget, there is hardly any mentioning of the rubber sector, which is very, very important. And it has been talked over many times including having a master plan in place, which is very elaborative and says, what needs to be done in order to capture the value that this country can earn in the global marketplace. So I think for me, there's nothing much to say except that the total discussion about how we can bring revenues and how the rubber export sector connects to the economy is a big miss at the moment. That's in a synopsis I can tell at the moment.
Thank you, Doctor. Mr. Dilshan Rodrigo, your views, initial views from the role of commercial banks. What is the budget presented for you?
Thanks, Suleiman. So I will very quickly, take you through the context, and then basically also cover some of the key points that came out of the budget. So as you all are aware, the interim budget basically amended the tax rates. So the financial services sector across the board has income tax of 30%, a value-added tax of 18%, and a service levy of 2.5%. So basically that results in an effective tax of about 55% to the financial services sector. So that's a very, very challenging situation for our earnings and also for our retention of earnings going forward. But I think the bigger issue is the indirect impacts on business, on growth and profitability. So you have tax on businesses also uniform at 30%. Now all the sectors across the board basically have to pay 30% income tax. And then we also saw the progressive tax on individuals, where the effective tax rate for people above 100,000 rupees would translate to around 30-36% on individuals. And irrespective of whether you're in the public sector or in the private sector, that affects your earnings as well. So all this actually has indirect impacts on the banks. So earnings are strained because of the taxation. Earnings are also strained because of disposable income being reduced on individuals, as well as the high interest rates that people have to pay on their borrowings. So on one side, you have earnings being challenged by banks. Then you have foreign exchange liquidity as a challenge as well in terms of the dollar earnings versus dollar expenditure. So this has put a lot of pressure on banks to really, focus on the exports and the remittances businesses to be able to show up their dollar liquidity. Because most banks, particularly systemically important banks like ourselves, have significant investment in sovereign dollar securities with the government. So that puts a strain on our liquidity position when it comes to maintaining our liabilities with our depositors. Then also that in turn, in terms of the impairment impacts, puts also pressure on our capital ratios. So it's a very tough situation this year as well as next year on the banking sector. Specifically, if you take the budget, there were just 2 points that stood out for me. First is to set up a new financial asset management company to transfer non-performing assets to an asset management company. So this is not new. I mean, we've been talking about this for the last 3 years or so with the advent of COVID. And this is something that is that became very popular in East Asia following the East Asian crisis around 15 years ago, right? And with that, I think it was about 10 years ago. So with the East Asian crisis, which impacted Korea, Indonesia, Thailand, there were companies that were set up to buy distressed assets and then take over the ownership of those distressed assets and realize the investments. But most importantly, take it out of the banking books. So that's going to be, operationalizing this is going to be a challenge, right? And the legal environment is not set up for that. And there's a lot of aspects that need to be considered. So you need steering committees, you need people looking into this and then coming up with solutions. So otherwise it will be just another conversation topic without the ability to be able to implement. So that's the first one. The second one was the microfinance regulatory authority. So I think there is a discussion in the budget about protecting small and medium-sized micro customers as well as their both sides, the depositors as well as the lenders, and to let the CRIB to play a bigger role in terms of getting all of them registered in the Credit Information Bureau, and as a result of that, be their lending also to be reviewed, and as a result of that, hopefully to get more transparency on the amount of borrowings and lendings they have, and to be able to manage them a little better. So what's happening in that industry is that in the past, the informal sector used to dominate that industry, particularly on the lendings, and you had about 30, 40 microfinance companies who are registered. There are 4 registered by the central bank, but there are also other better known companies who are leasing and finance companies who've also got into the microfinance business, who have played a significant part. But a majority of this used to be done by the informal lenders, who we call the shadow economy. There are probably 20,000 companies engaged in that sector. But now, following COVID and following the economic crisis that the country is facing, many of them are no longer operating. So there is a consolidation of that industry that is taking place amongst a few players. So that's in a way a good thing. There'll be a few players who will really be working with the customers, the small scale customers, and it will be a regulated sector. And today, with the interest rates what it is very difficult to be able to manage being in that sector. So a very important imperative would be for interest rates to come down in the next 6 to 9 months to ensure sustainability of the borrowings and that sector, which is really the engine of growth for the economy. So that's, I think, the 2 key points that I want to talk about: the new financial asset management company and the regulation of the microfinance customer base. So I'm now open for questions from there.
Thank you, Krishna. From there, moving on to may I invite Mr. Kanishka Veerasinghe to give your initial thoughts on the budget from a labor and employment perspective.
Thank you, Suleiman, and I would like to thank the organizers for inviting me for this session. Well, it's a very progressive and politically committed set of proposals that have been placed for labor law and market reforms we have to acknowledge. But as Duminda alluded earlier, the proof of the pudding will be its implementation, and I sincerely hope that those who are responsible for implementing these proposals will take cognizance of what is required by employers and those who create jobs, and also assist the private sector in truly becoming the engine of growth rather than paying lip service. I have to say this, but here I must say that there's a distinction. There's political commitment after a long period of time for this type of reform, and sincerely hope and wish the government all the very best in its implementation of some of these policies. I would like to make my observation, Suleiman, based on the creation of decent jobs or decent work, as well as creating an ecosystem for sustainable enterprises to thrive, and thereby contributing to the overall economic revival of the country. So looking from that perspective, I believe the government's proposal to bring a new set of unified and updated labor laws. We are not talking here only about codification. We are talking about an updated set of laws, which is a challenge by itself. But I sincerely hope that all stakeholders will agree and they will commit themselves through the processes of social dialogue, as we are used to calling this process when it comes to labor reforms and things like that. I sincerely hope that all stakeholders will realize the importance and the watershed situation that our country is now currently facing. And it's an opportunity for us to actually put in place a system which continues to create employment without much impediment. So that is something that we need to focus on from a macro point of view. I also see that just before para 11, para 10 talks about the National Productivity Commission, and I sincerely hope that these will be linked, because these are there's an interlink between, as you all know, productivity and competitiveness. And I sincerely hope that the new commission will also give thought and implement a link between productivity and wages. And one way of doing that is to link wages with skills. And when you talk about creating an ecosystem, Suleiman, we have a highly literate workforce. They practice numerous skills, but unfortunately there hasn't been a collated process of harnessing their skills and certifying their skills. But some time ago, when I was at the EFC, we got in collaboration with the ILO as well as the Vocational and Skills Ministry, we launched what we call the Skills Passport to do that. But since I have been asked to talk about labor market reforms, I will not talk too much about it. But it's very important that all these systems are, linked, so that the labor, holistic, we not only focus on labor laws, but also look at holistically on labor market reforms, right? And the government has also talked about unemployment insurance and looking at using ETF funds as well as an insurance schemes. I think these have to be looked at in a way that it will not further burden employers, because a lot of our panelists spoke about the cost of employment and creating jobs, because we need to understand that the private sector, despite all the challenges that we are currently facing, is somehow, in some sectors, they are creating jobs, and somehow they are holding on to the existing jobs. They are sustaining those valuable employees, skilled employees, and in doing so, we are actually sustaining the entire communities. So we need to be mindful of that. So, and also in doing that, we obviously need to issue thorny issues like reducing redundancy costs, the termination costs. Now, the Termination Act, I have to say this very boldly, has been looked at as one of the most archaic pieces of legislation. And I think it was Hasit who mentioned that many investors have highlighted certain aspects, and this is one direct law that they continue to highlight. So I would expect the stakeholders to seriously sit down and think of a new law. For example, an enterprise restructuring legislation, which addresses timely requirements, such as, because restructuring does not necessarily mean termination, redundancies. It should encourage change of terms as well as change of processes. So, and also things, new concepts such as furloughs. We saw this during the COVID. It was very successfully implemented by companies to ensure that, they retain employees, but at the same time, take off that burden or the cost for a time being, particularly during a crisis. So we should encourage new concepts such as furloughs as well as temporary layoffs, where the restructuring of the company can take place in a way that you sustain the enterprise as well as the majority of employees. And we must also not forget, Suleiman, about the SMEs, which contribute a lot to GDP. Some are still in informality, as we call it, but and we know that some of them will never come into the formal sector, but it's a case of harnessing them. So we need to ensure that, the new proposals do not burden these businesses in the SMEs with additional costs. Okay, and things like exempting them from EPF, ETF, at least for a particular period of time or until a particular threshold of employment, such as maybe 15 in number, should be seriously considered, because we need to, I saw a lot of proposals being targeted towards the revival of the SMEs and, to enhance their capacities. So I think we need to seriously think of labor market reforms also to, that support these type of activities. And I quite understand it has to be a balanced approach. So I would expect things like, consultation, conciliation and things like that being brought in a way that maybe we can look at the South African model where labor inspection is done separately as well, and things like conciliation, mediation, and also consultation are handled by different entities, which works very well. And perhaps if the policymakers are really interested, they might also look at the South African system called NEDLAC, where all the economic activities are discussed tripartite: the government, the employers, as well as the employees and those representing employees. I think these are matters that we need to take on now, and this has created an opportunity. So I must laud the government in that sense of showing political commitment. Like we have not seen this type of commitment in the past. I would like to laud them for bringing this, and I sincerely hope that they will look at this as a holistic approach, with a holistic approach rather than a fragmented approach. So those are my initial thoughts. Thank you.
Thank you, Kanji. I think that was also mentioned by the president himself when he was reading the speech, that it will be done holistically with all stakeholders involved in coming to these changes of labor law. So moving from there to Mr. Sanath Ukwata, your preliminary comments, Mr. Ukwata, you can just keep it to about 3 minutes on the tourism sector, if you don't.
Thank you very much. As you know, the tourism being an important source of net foreign currency earnings to the country, and the positive role we can play in order to enhance help the country on this foreign currency crisis that it is currently experiencing. We expected much more from this budget, especially focused on rebuilding the industry and safeguarding the livelihoods of our stakeholders. As you know, the tourism industry, the best of times, we earned 4.5 billion of US dollar earnings to the country. And there are a lot of misconceptions about these earnings. Actually, 80 to 85% of the total earnings remains in the country, because our foreign input is very much less on the contrary. Apart from few spirits and some food items that we import, bulk of it, we source it locally. So it is a industry where we can earn much higher percentage of foreign currency earnings than any of our export industries. And we were given export status, and we have lost that now. If you look at our top line taxes from last year to this year, we were paying 0 VAT. Now we are paying 15%. In addition to that, we are paying 2.5% social security tax. On top of 1% TDL, tourism development levy, we're already paying. So plus, when you look at indirect taxes for the tourism industry, especially the hospitality industry, you have to also look at this 10% service charge factor, which has been there from the inception, where we distribute 10% of our revenue among our staff. So when, for accounting purposes, when you calculate the revenue, they add the 10% service charge, and then after that, all the other top line taxes. So actually the net effect on the top line will be nearly 30%. So 30% on top line is a huge burden for an industry that is yet to be recovered. And also our corporate income tax from 14%, it has gone up to 30%. So this is not at all encouraging or helpful for an industry which has been badly hit by multiple crises, which was of course beyond the industry's control. So overall, what we need right now is some kind of debt restructuring. As Mr. Dinshan Rodrigo mentioned, the budget, President, the Finance Minister mentioned about asset management company to transfer the toxic assets of banks to and the lending institutions to this company. And I would say 90% of the tourism debt is toxic. They have been on moratorium for the past 3.5 years. So therefore, we would like to know what is the concept of this asset management company, whether it's a privately owned one, which is a foreign owned one, or this is a government owned or local owned, whether it has parate rights, so on and so forth. So that's something that I hope the government will engage the private sector as well before coming to any kind of finalization. Other takeaway from the budget is the tourism development zones, which was mentioned, 3 zones to be established in East, South, and Western province. No clarity is given, so we are waiting for more clarity on that. And the last but least is the labor laws to be modernized. As you know, our business is a seasonal business. We have workforce which we increase during the peak season and reduce during the off season. Our laws in the country, labor laws in the country, are not at all friendly towards the tourism industry in this respect. So we hope certain measures will be taken in order to safeguard the industry and also to attract, as Mr. Ulangamo mentioned in his presentation, that a number of large foreign investors are still interested in investing in the tourism industry in the country. So we need to be taken all these investor needs into account and build a better investor-friendly environment in the tourism industry for it to prosper. Thank you.
Thank you, Mr. Bhatta. And with that, quickly we'll move on to Mr. Channa Manoharan. Channa, a quick overview on IT development and exports from your side.
Yeah. Thanks, Sulaiman. I believe you left the best for the last. So, I mean, not to repeat what the other panelists said. I mean, we are in as an industry a very fortunate position compared to much of the other industries spoke about lack of demand, spurred by the Great Resignation as well as the appetite for digital transformation. We haven't seen any slowdown in demand in our core markets, and that's a envious position to be in as an industry. Also, we thank the government for recognizing the importance of the sector and the growth of the sector. So therefore, we are spared from the income tax imposed on export industries in relation to export of IT services. We do note that the local companies in our sector are basically coming into the tax bracket that may impair the ability to invest in continuous R&D and skills development. My personal view is that if a government has to achieve an ambitious growth of export-oriented growth of $3 billion year on year for 10 years, it requires a transformational approach. Whilst the policy direction is very clear, we laud the government for that. Our experience on the ground is that our state agencies who need to do their part whilst we do our part as a private sector are absolutely fantastic in maintaining status quo, but there's nothing beyond that we can expect from them despite all the policy inputs, operational transformation requirements that we have submitted on a year-on-year basis to successive governments to create a conducive enabling environment for our sector. I mean, that regard, if you look at policy intent, I think the creation of a single external trade and investment agency, combining several agencies who are duplicating their own functions or inefficient, we laud the government for its intention. We would like to see that instead of merging existing government agencies and creating the same officials being there, would they be able to benchmark how similar agencies operate in the region, like the Invest India program, Made in India programs, where they have hired international expertise and benchmark the single window concept to a fantastic state where any investor is attracted by the efficiency of the state combined with the other factors of competitiveness that our economy offers. For us, whilst the sparing us of the income tax is a great benefit, our biggest challenge is talent. Because we used to enjoy during best of times, we looked after our talent, invested in our talent, upskilled our talent, and we retained them in our country to generate much required foreign exchange of about $1.7 billion annum. At the moment, our biggest challenge is our attrition rates from low teens have gone up to nearly 30% in some companies primarily because of the fact that our talent is migrating. So for a knowledge services economy to and a sector to thrive, we need knowledge workers who are highly competent and world-class in terms of skills. The president has alluded to the fact that he wants to create world-class talent in Sri Lanka, but we can't keep creating and letting them migrate to go and benefit some other economy. We need them to be retained in this economy, and then comes the tax issue, where when you go and burden our talent with higher personal income tax, I understand the country's situation, which is no fault of ours due to bad policy, continuous policy interventions by successive governments, and of course circumstances created by COVID. But our biggest challenge is that the tax burden will accelerate migration, will accelerate our talent being lost to our industry, and that's our biggest challenge. We have made continuous policy and interventions that support that we require, not in cash, but purely in terms of changing government approach to higher education, creating STEM graduates, also creating an enabling environment for private sector education to thrive in Sri Lanka. The liberalization of private sector university education nearly a decade ago contributes to the fact that most of our employees or talent comes, 70% of our recruitment comes from non-state universities. We don't see the capacity increase taking place in state universities. For whatever reason, there is lack of resource allocation for increasing capacity in our sector. We have offered many suggestions to the state and the stakeholders where we can cross-skill and upskill in partnership with government. We are not even expecting anything to be paid by government. We want to do it at our cost. But to facilitate an enabling environment to do that, we have created our own scaling platforms with the investment of our own companies and the chambers. We have created opportunities for people who are not from our sector to cross over to our sector and to employ them. But there's hardly any state support to make that shift happen. Number two, we have basically set to create opportunities to release state-owned land for creation of private sector universities. At the moment, there's an investment restriction for foreign direct investment into the education sector. We have canvas that to be removed. Also, in terms of the visa restrictions, is a huge issue for foreign direct investment to come into the country, where we are unable to bring in much needed talent from overseas to transition key accounts into our sector. So basically, if you look at it, we see a huge allocation of 232 billion rupees to higher education for the education sector, a 25% growth in allocation to the sector, but there's absolutely no accountability for that investment being made out of our tax money. They continue to invest in public sector, in schools, in universities, but there is no, the quality of, we hardly see any improvement in the quality of the output, nor in the quantity of output for that public expenditure. So we'd like to see some accountability for the budget allocation, the resource allocation, which is going into the education sector. And whatever new initiatives, we see huge amount of new initiatives which have been proposed for infrastructure development. We see for curriculum development, also for quality assurance board being set up. But I think there's lack of collaboration or more adequate involvement of the private sector industry into creating such talent. So at the moment, lip service is being provided for getting inputs from the private sector to develop the curricula and to kind of offer views, but none of them are absolutely taken on board to create an outcome that is relevant to our industry. So our biggest challenge is talent and also execution of all the plans that we have presented to government as our national strategic plan of a 5-year growth. If the attitude of the state remains to be the same, where they take on board our feedback but nothing happens, the 3 billion year-on-year export growth will only be a pipe dream. Thanks, Subhaman.
Right. Thank you, Chandra. So with that, I think we've covered the initial comments by each of the panelists. Moving on to the questions and the panel discussion. If there are any questions you would like to ask each other, also please feel free to come in. Starting with Mr. Tuminda Hulangama. Hulangama, are you?
Yes, I'm there. Yes.
So from the economic side, whereas you did cover, there is also a proposal to implement taxation commission. I just want to know your views. How important is this in sustaining the numbers that were mentioned in the budget, as well as what would be, in your view, the most sort of optimum structure such a commission would want to implement?
Yeah, actually, good question. I'm proud to say that the Chamber Budget proposal that specifically asked for taxation commission. We sent it last week to government after deliberation of the EPC to set up the Presidential Commission on Taxation, and the government accepted that suggestion and appointed the commission. So I think the objective of the commission, our view was that we have ad hoc tax policies that have been implemented in this country over the last few years. All the people who are here who are in taxation will know that. Whether it's reduction of a tax or exemption, or the imposition of a new tax, or its removal of an exemption or increasing the tax rates, all have happened very haphazardly on an ad hoc basis because we went to deficit financing for the last few years. We look at the budget expenditure and try to fix the deficit. Never we thought of a rationalized tax system. So that is why we said the taxation commission should now sit and look at all the taxes paid in Sri Lanka, from the import point taxes to the domestic taxes, both income tax, VAT, and the other indirect taxes that we have, to look at them and see the base on which this tax will be charged. It has to achieve government revenue targets, number one. Two, there has to be a proper mix between direct and indirect taxation, because indirect taxation, as you know, will go across the country. The wider base, wider collection mechanism, but at the same time affects everyone in the country. So vulnerable sector has to pay also the indirect taxes if you pay it across the board. But at the same time, you can't have heavy direct taxes like what has been proposed now, because that will reduce consumption, eliminate the middle class, and also as a disinvestment for, rather disincentive for investment. So you need to have a correct balance between the two. You know, you can't say one is better than the other, one should be the other. So that's why we said taxation commission should see every strata of society, of economic levels to which these taxation go, and try to come up with a correct mix for local domestic tax. For import taxes, I think Dr. Rajapaksa is mentioning, but I think the intention is to see how all the para-tariffs that we have, like the cess. Cess is only a word unique to Sri Lankan tax. I learned from Muktas Jafar the other day that cess is a very rare word. From where I found, I don't know, but it's only used in Sri Lanka. The word cess. So, all what you call is para tariffs, which is very complicated in Sri Lanka, right? We have VAT, NBT, PAL, sorry, not PAL, cess, custom duty, etc., all coming at the import point. So look at and see and rationalize this tax system there. As one thing we requested. And then also on the tax administration, also we need to improve and enhance and change our current tax administration system to make sure that the more people are brought to the tax state, tax base is expanded, so that everyone pays their tax correctly. Also to see how we can make it obligation for taxpayers to pay a tax, because as you know, 96% of our collections is on return tax, which proves two things. One is that we all pay our tax correctly, and therefore there is nothing to collect outside that, or that the system is inefficient, that they are unable to cash and could not pay. So, look at all the aspects, and so Presidential Commission will have to take into account all the aspects, sort of leakages, shortfalls, the role of consultants, the role of taxpayers, the role of Inland Revenue Department, the customs, the tax policy, how it should go. So so that there is time to study rather than before a budget, 1 month before the budget, imposing it or reducing. So that's the whole idea of taxation commission. The chamber suggested, and chamber said we can lend our support where necessary government set up that taxation commission. So that's the objective of that. That's a good proposal.
Yeah. Thank you, Mr. So moving on to Dr. Ranasoma. Just a quick question, like you heard, the target is to increase exports by 3 billion a year. And you did mention that I think rubber exports contributed to 1 billion, if I'm not mistaken. How would you see the contribution of the rubber industry in meeting this target? What more needs to be done to take you from 1 billion to a significantly higher number to contribute to this very ambitious $3 billion increment every year?
Yeah, obviously, this is not an easy thing. If you look at the way the rubber industry, particularly on the production side, has performed, we have had continuous decline in the rubber produced in the country. Whereas the industry requires rubber as a base material. If you go up by the statistics of 2021, we have imported 60,000 metric tons of rubber, while we have produced locally about 80,000 metric tons of rubber, or 78,000. So when you look at it, 45% of requirement currently is imported. So when we want to grow this segment, obviously your raw material base has to also grow simultaneously. Now, if you are going to depend on imports to grow that, then there is going to be a lot of challenge. Number one, the local value addition was going to decline in some manner. Secondly, we may be losing out the potential that we can extract from Sri Lanka, because the other people from whom we are trying to attract FDI may look at, where are the sources, where are the base material available to put up their factories, than looking at Sri Lanka. So I think it is extremely important in that sense that we have a concrete plan to lift the production base in Sri Lanka. Now, of course, the budget talks about zones and releasing unutilized lands. Possibly some of these could be for reviving the rubber industry and the rubber plantations, so that our own produce can support, number one, replace imports, number two, support a base for the industry to grow. Secondly, I think it is also important that the skills and technology used are also serviced. Particularly, we need a good R&D for to be able to extract the best quality rubbers, so that we also create a name. We have already created a name in certain segments for our rubber, but we can actually base what we have to leverage and then grow from there. That is the second area. Thirdly,
just to interrupt you, Doctor, you said 45% is imported rubber, is it?
Yeah, I mean, right now we are importing from our requirement. We require about 140,000 tons per year at the current level. Out of that, about 45% is imported.
And what's that value like roughly? Would you know? 45%
is about this comes to 138 million from 2021 figures. So that's USD. Yeah. So that's quite a big sum.
So that's immediate saving if we grow it, right?
I mean, part of it can be saved. Part of it can be saved. There are other import requirements, but rubber component we can actually target some savings. But the question is not that. Question is, if we are double that, we don't have the capacity. So the entire double in the second part will have to be imported. So therefore, there will be a drain of our forex as well while trying to grow the industry. So we need to focus on increasing our rubber production base. I think the other aspect I would highlight is what support we can give to increase the yield from our rubber tapping. So I think from the numbers we are pretty low in our yield compared to the region. The region sort of is able to yield about 3,000 kilos per hectare, whereas we are in the range of lower than 1,000 kilos per hectare. So that yield component is also important, because that actually gives a benefit to the farmer, because if his yield is better, then it becomes more economic. It makes economic sense for him to grow his rubber, and that requires training, development, and other activities. So for me, I think when I look at how we can contribute, there is definitely potential. The global industry is there. Our Sri Lankan share of the global industry in the rubber sector is about less than 1%. So there is definitely the scope, but we need to get the fundamentals right in place.
Thank you, Doctor. Moving on to Mr. Atula Ranavir, a quick question. Atula, there is there's a proposal, I think Mr. Gajendran also mentioned it, very surprising that significant revival of the SDP Act has been mentioned only for hub services. That has come in, and then quite a few concessions for that area. What are your views on that in terms of consistency from the policy that they've taken off all exemptions, and now again exemptions are coming in through the SDP, which hasn't been given for quite some time now?
Yeah, as you mentioned, it's SDP Act. Now, as I mentioned earlier, also that is the minister is having superpowers on this act, because he can now with his assistant he can the BOI can identify that project and recognize it a project which is suitable for SDP. Then with that the minister can gazette it as a SDP thing. Then thereafter, they have to put into the cabinet and get it out, then pass it in the parliament. Now, with this situation, sometimes what will happen, the minister, suppose the minister want to give an approval for a non-party, some connected party, and he can make his decision to do that. Now, as a result, now if you'll see the previous BOI at now up to 2013 or something, BOI was giving tax holidays, then replaced with SDB and the Inland Revenue Act. Now, then for a short time period, again, BOI started to give this tax concession, again stopped as a policy decision. It is not the authority is there, but as a policy decision of the government, now BOI is not giving any tax holidays. My personal view, of course, SDB Act to be amended to give the authority for a panel to take the decision instead of one person. Right. Now, with that situation, now definitely SDB Act is very important, because for heavy investments into Sri Lanka, that is very much important. But it has to be administered properly. Now, with the things happen in the past, we can see that there are a lot of approvals where we can't understand why. We are wondering why they have given that type of approvals. There are some questions, right? Now with that, I think if they are, no, it's okay to give this authority to SDP, but SDB Act to be improved, strengthened. That is my idea.
Thank you. Moving on to Hasita. Hasita, just a quick question. There is a high-level policy to enhance the global access to markets. I think that has been one of the key drivers in many of these export countries which have succeeded. And revisiting FTAs that came to a standstill. What insights can you give to this area, and what would actually benefit Sri Lanka in terms of a region or an area? Should it be, I think Singapore was mentioned, Thailand, is that the right area to really make the most of our strengths in terms of where we can export to? Your quick views, Hasita, on that.
Yeah. So, Suleiman, I think FTA, the free trade agreements are absolute must if we want to grow exports beyond a point. I think we've heard in the last few days about some of the conversations about why the exports have not grown at a rapid pace. So in the past, right, some comments, etc., we have seen. But I think one of the reasons is that we had GSP plus, which is the European duty-free access, in two passages, of course, in the 2000s, and then thereafter we had a passage where we lost it and then we regained back. So that period we saw very clearly the growth from Sri Lanka to the Europe. So similarly, I think when other countries have an advantage against you because they have FTA, then naturally we have a challenge from export perspective. I'm particularly talking about from a merchandise export perspective. So then in that context, I think the need for FTA to grow exports is absolute must. So that's number one. Number two is to your question on where should we focus more. Then the other, probably I think the Canada, Australia, or US side will be a very important market, but it's very unlikely that US will give. But Canada is still an open conversation. They're doing their internal reviews of which countries will get into duty-free access, etc. at this point of time. So I would say Canada will be an opportunity. And then when you look at China, India are the other two big ones which are in the regional space. And of course, Japan. So by looking at the Asian markets to diversify further from the future growth engines, right, be it China or India in particular, if we have that access, and we made progress in the past in these and then they've stalled. Or at least they've not made progress to do a closure of a agreement. We do have an FTA with India, but with very limited kind of benefits. For example, on the apparel side, we only can export 8 million pieces per year for a whole year, right? So it's almost insignificant, right? So I think enhancing those and trying to see how we can work out a duty-free access to these growing emerging markets will be crucial. So obviously, if Canada might be a possible area that we can attack fast, and but US is very tough. But if possible, that's great. And in the meantime, diversifying to the Asian growing growth engines like India and China is an absolute must. And in the meantime, Japan is another area that we can, given our relationships, etc., that we can look at. So those are the markets that we need to look at. And again, looking at what really need to be brought in these conversations is primarily to see what are our strengths, what can we offer to those markets and grow in exports in a exponential manner. So those are the areas we can be. You may have a low base at this stage, it doesn't matter, right? But you need to figure out what are those categories, products, and segments are, and then target those and really look at getting those FTAs negotiated that way. For example, to Indian domestic market, now apparel being one of our key strengths here, we have the ability to really do world-class apparel products. Indian local brands are coming to us. But unfortunately, we don't have the access. Bangladesh has unlimited duty-free access to Indian market today, right? So they are almost exporting $1 billion thanks to that arrangement, whereas we have only 8 million pieces that we can export from Sri Lanka duty-free. So that just as an example to say the area that we need to drive and focus in those strengths that we have.
Thanks. Very useful. I think if we can negotiate that $1 billion as part of the negotiation, that's half the target on the 3 billion. Right?
Maybe we can look at whether we can do some offset against the debt repayments we have.
Thanks, Hasita. Moving on to Mr. Gajendran. Mr. Gajendran, I think you were very vociferous about this. I think earlier. Could you provide a brief clarification to us on the amendment in terms of the appeal process? I think you were strongly against it from the time of 2018. The 7-month rule, I think there's been a difference. If you can just brief us.
That is a very progressive move because there will be adequate time now to finalize the matter. And even if the department doesn't finalize it, then it is held in favor of the taxpayer. But if you want to gain on time, that is another thing that we can look at. It is the 2.5 years period for the department to make finalize and make an assessment that could be brought back to again to 1.5 years. What was there before? You know what happened? There are so many good features in the old Indian Revenue Act. What we threw the baby with the bathtub. So we have to go and pick and choose all those things. If you just permit me, apart from that, to mention on the Strategic Development Act.
Yes, please.
Yes. Basically, there should be no ministerial or individual intervention in granting a relief. Especially when if you are, you must specify the criteria, qualifying criteria. And you must allow the law to operate. If you are going to say a strategic development project, identify what it is identify the level of investment, identify the preconditions for it, and allow it. Otherwise, what is going to happen if human intervention come in this country, and this is not going to happen, because then the right decisions won't be made. Now, even if you see Hasita's point of on getting duty FTA and negotiating duty-free status, our people are not capable and competent to go and talk to that. Other thing is, it is all, if you see what we are gone wrong, is all these decisions are talking, and at the highest level, we know all the answers, we know the problems, we are not getting it there. It is self-seeking and self-interest that comes in. End of the day, if the country or the people benefit in that way, then it is okay. Otherwise, it is the same thing. So I think that message has to go. This for key decision making, set the policy key decision making cannot be made by politicians, and the system, the law should allow to operate to function that.
Sure. Thanks, Mr. So we're running out of time. Unfortunately, I don't know whether we can finish off with all the questions, but let me just throw one out, maybe to Dilshan, to you. Just want to know your suggestions on the current budget, whether the current budget provides assistance to banks to manage the issues surrounding the shrinking economy, and also the impact the banking sector has to the debt crisis in terms of the investment made in government debt especially, and the potential write-offs coming in. Is there anything in it, and what would the banking sector probably suggest for future stability that's not currently mentioned in the budget?
Well, I can suggest a lot of things, but then we must understand the context and the practicality on which we are operating right now. So it's inevitable that we have to stay with these very high interest rates, very high levels of taxation, which is not only impacting the banks in terms of their own earnings, but also the industry more so. So ultimately, the bank is only an intermediary. So if the industry is not thriving or sound, it becomes very difficult for banks. So today, as you know, excepting for a few industries like the exports and maybe the BPO, KPO sector, which also has their own challenges, in relative terms, they are probably the only two industries that are reasonably sound today. Whereas you see the construction industry, you see the leisure industry, you see the transport industry, which is piggybacking a lot on the leisure industry. All of them, affected. Of course, there are many other industries in the middle that are, moderately impacted as well. So in such a situation, it is very difficult for banks to be able to, be like they were before. And I think everyone used to say banks make a lot of money, the industry doesn't. So no longer would we be able to have that label, because from here onwards, you will see the pressure on our earnings, pressure on our capital, pressure on foreign exchange. So we are very mindful that we have to go through some pain over the next 5 years or so to be able to get to what we used to be maybe in 2019, realistically speaking, right? And that requires, as many of the panelists said here, a lot of hard sacrifices, to do the right things. So it's a lot to do with ultimately execution. All is not lost. As a country, we are here, we have committed, our families are here. If we want to make a difference, then we need to commit to execution. And committing to execution means addressing the issues in terms of how are we going to bring in foreign exchange into this country? How do we address remittances? How do we support all the export industries that we spoke about? How do we support the leisure industry? All these industries need to be supported. Then how do we also support the local industry? How do we build the assembly, manufacturing, import substitution industries in this country and become a production economy without relying on, I think someone mentioned, buy Sri Lanka, right? Like India did this some time back during Narasimha Rao's time when they were having serious issues of this nature. And they went very hard in terms of really supporting the local industry. And that needs to be done. Then how do you make people want to do business in Sri Lanka? How do you improve your doing business index, ease of doing business index in the country? How do you drive a small government? You have to drive a small, you can't just about talking about digitalization and productivity improvements in the government sector. When you have such a massive government sector, it's not going to work. So you need to really work towards a small government. So all of these areas, these are just 4 areas I mentioned, require high level focus and a drive towards improving from where we are today to where we want to be. So maybe it needs to be driven by even the presidential secretariat. But there has to be committees working on this. There should be targets set out monthly, annually, over 3 years to get to where we want to be. And we need to track those KPIs whether we are getting closer to what we want to do. Unless you do that, it's not only the banking sector, all of us are going to be having to face extremely difficult situations. It can only get worse from here if we really don't, address these issues. So that's really what it is. So it's easy for me to give you an answer to say, I'd like low interest rates, I'd like low taxes, I would like low inflation, so the disposable income to the people I lend, it becomes easier for them to pay back. But these are, from an economic perspective, not sustainable until we get out of this situation. First of all, we need to bring the country into some kind of stabilization mode. And I believe that will take at least 1.5 years. And we really need support. We need IMF to come in. We need the development multilateral assistance to at least support us through this period. But then even for that to happen, they need to see the virtuous cycle in terms of what we are doing here to become sustainable over a period of time. So ultimately, how do we address the 2 issues of the fiscal deficit and the balance of payments deficit? They need to see that. In Sinhala, they say, Tama hisata tama atamaya sevanella. So basically, we need to find a way to get out of this situation and demonstrate to the donors or the funders that we are going on to a sustainable path. Then only you will get the support. Not by touting ourselves as a country that is a poor country. We need assistance and support. We need to change the whole thinking process, as some of the panelists mentioned, to say this is a country with huge potential. Start investing now. And then we can all benefit from that going forward. And that's how you actually encourage investment into the country. Everything is a bargain at the moment. Deposits are a bargain, real estate is a bargain, condominiums are a bargain, tourism room rates are a bargain. So it's an opportunity. That's, I think, the essence of what I'm trying to say.
Thanks, Dilshan. Just one final quick question before we close. I apologize, I couldn't go through everybody, but Suresh, just I think if you want to be interested in the status at the moment of where the VAT and the Inland Revenue Act stand. Both were challenged in Parliament as bills. They have not come out as law yet. Can you give us the status of where they stand and what the applicable dates are? Are there potential change? Can we rely on the change that we hear? Over to you.
Yeah, the VAT bill was challenged by 2 petitioners, and the determination has been delivered to the Speaker. And according to that, the exemption applicable on residential accommodation, residential condominium accommodation will be taken out only from with effect from 1st of December. So that is what the judgment is. Whether that change, that date will also further change during the legislation process, we have to keep our fingers crossed to see, because because this is all to ensure that there is no retrospective legislation. But then during the next 15 days, I don't think the bill it's possible to pass the bill. So in that context, whether Finance Ministry will be progressive enough to further extend the date is a question mark. We have to wait and see. But if they don't extend that and decide to keep it to 1st of December, there's nothing anybody can do, because the law does not provide further relief in relation to that. Right. When it comes to the Inland Revenue Bill, tomorrow is the last date, according to my calculation, for the Supreme Court to deliver the determination to the Speaker. On the first day of the hearing, Attorney General gave a undertaking not to go forward with certain amendments that were introduced. One is to ensure that the power was to be devolved to assistant commissioners to make estimates under section 92A, a new section. So that will not happen. So that's a welcome move. And then also there was a move to introduce a new penalty provision with regard to granting of extension for payment. There's a section in the Act, and notwithstanding the granting of extension, a penalty to be imposed was the introduction. Now that section also has been considered. Attorney General said that will also not be included into the amendment. And also there was an attempt to reduce the time frame of 30 days to make a request for an admin review against assessment to 14 days, and gracefully Attorney General has agreed not to pursue that one also. So those three decisions will not come. In addition to that, most importantly, in relation to the personal income taxation, again, undertaking has been given. It will not be effective from 1st of October, but from 1st of December. So now that again, just like the VAT thing, we have to wait and see whether Finance Ministry will be graceful to postpone it to 1st of January, or whether it will be 1st of December. Again, if the Finance Ministry decides to go with the 1st of December, though the bill will be enacted in January or so, there's nothing anybody can do now because the constitutional remedy process is over.
Right. Thanks a lot, Suresh, for that synopsis. So I'd like to take this opportunity to thank each of the panelists for your patience first and your very valuable contribution. I will now hand over to CMA to do the concluding remarks. Thank you.
Thank you, Sulaiman and the panelists. As we come to end of today's proceeding, now I invite Mr. Henaka Bandara to deliver the concluding remarks.
Thank you, Gajen. Ladies and gentlemen, good evening to all of you. You have heard the impact on budget proposal from tax experts and the eminent speakers in various industries. At the same time, during the past 2 days, you would have heard through various channels different interpretations as well as challenges of recovering taxes, delay in passing laws, administrative difficulties, and all sort of positive and negative impact on the economy, business, and society at large. Several persons have said that the reforms are good, but they are concerned about the implementation, social protection, and social justice. Some even interpreted the budget as a hit and run budget. Nevertheless, the Minister of Finance, in his capacity as the president of the country, as usual, explained how the government is planning to meet the economic challenges by emphasizing the necessity to have sound and strong macro fundamentals. More importantly, articulating the benefit that society will get over a long period with the implementation of budget proposals and strategies. However, the question is to what extent and how long the general public can tolerate the adverse impact on their day-to-day life, as the ground realities are somewhat different. You have already heard that the poverty of the country has increased by threefold now. It is true that reforms are necessary and government revenue must increase, but do they have a practical results-oriented plan to improve the revenue and curtail the unproductive recurrent and capital expenditure? Even the experts have mentioned that the revenue target estimated is impossible to achieve given the current business and economic environment. In fact, when compared with the previous year, this time, as already mentioned by one of the panelists, it has estimated 64% increase during the next year. So that is the kind of the problem that we may face in the future. With that note, let me thank two eminent presenters, Mr. Atul Ranavira and Mr. Dominda Hulangamua, for explaining the economic implication of the budget proposals. I'm sure that the professional analysis provided by them would have helped all of you to clear up any doubt. I also would like to thank Mr. Nista Sulaiman, the moderator, for the job well done as usual, and all eminent panelists. Let me read out all the names also, who have supported and continue to support the CMA, Mr. Kajendran, Suresh, Dr. Kulatunga, Dr. Mahesh, Dilshan, Mr. Sanat Uppat, Chan, Hasita, and Mr. Kanis Kabir Singh, for the expertise and input shared with us and providing clarification to the extent possible within the time allocated to them. Let me also thank our President, Dr. Lakshmana Vattabala, and Mr. Gajendra for organizing this webinar, and the CMA team for all the arrangements made to have a successful webinar. Great to have all of you, ladies and gentlemen. Hope to see you all again. Thank you. Over to you, Gajendra.
Is Professor want to mention anything, or shall we conclude, sir?
You can conclude now, yeah.
Okay, thank you very much.